And the term sustainability is being introduced in the industry to show that these companies are sustainable. Any companies which are not SRI are considered to be non-sustainable. Okay? Now, just to touch up on the on how the screens will result. So I think there may be a slide down which I will give you in terms of taking the universe and then bringing it down in terms of the screens and giving you the net residue. All right? I'll come to that point in a while. All right? So to introduce the Dow Jones Islamic Market Indexes, Dow Jones took this initiative in 1999, and I have to credit my previous colleague, Rushdie Siddiqui, who brought this idea to Dow Jones board, and Dow Jones board then gave him the mandate to proceed on to work on this particular proposal, and we launched it in 1999. Okay, and since then we have now launched more than 100 indexes, and I'm not sure whether you have caught up to the news that we just launched a new index this week. It was the Dow Jones Islamic Market, Islamic Banking and Takaful Index, to benchmark the performance of Islamic banks and Takaful companies in the world. And I'll come to that particular discussion about our investigation into the companies that made it, and some of the Asian companies and were not included. So therefore the indices keep growing. It is my job, together with a few others at Dow Jones, to try and create new Sharia compliant indexes. So if anyone got a good, fantastic idea, come and whisper in my ears. I'll be happy to listen to you. And so the notes are there. You could just pick it up on some key points there. I just want to highlight to you that we also have a Sharia board, which should be there in one of the slides, that guide us in terms of the entire process, right? Now, coming back to the screening, as I was highlighting to you earlier, since the Sharia screening would now remove the business screens, we would then start off with what we have as the general universe. So say, for example, we take the world index. There may be about 5,000 stocks globally, right? We take the 5,000 stocks and then we start to screen them. Which of the stocks are into the haram industries, right? The haram or the sin sectors, as we call it, and remove all of the sin sectors, right? And that is called as business screens, okay? Which is what you have on the 5 or 6 bullet points on your left, right? Once you have done that, then basically we also run through what we call the financial ratio screens, okay? Now the financial ratio screens came as a second phase of our screening process. In 1999, when we launched the Dow Jones Islamic World Market Index, it was on the business screens only. And once we had done that, then some of the fund managers who looked at it said, "Good job, Dow Jones, but I think we still have a problem here." And then they said, "Look, even though you have done your business screens, your index has got several companies which are non-investable." Why non-investable? Because it has got a lot of debt. Companies, they have a lot of borrowings, and the borrowings are in debt. And therefore, the question that the fund managers asked Dow Jones was, are we investing in assets or are we investing in debt? And this became a question. And not only became a question for Dow Jones, it also became a question for the Dow Jones Sharia board. Because, you know, there are varying views with regards to whether debt can be invested, al-dain. Can ad-dain be invested or cannot be invested? And how much of ad-dain can be invested? So that was the big question that was there. So the Sharia board looked at it in detail, and they found a dalil from the hadith of the Prophet that anything more than 1/3 is excessive. And using that as the guide, the Sharia board came up with the ruling that we can now screen any companies which has got more than 33% debt on its book. And therefore we use that as the basis to now remove any companies with regards to debt position, to positions on receivables, and also with cash and interest-bearing securities. And we removed that, and that became our financial ratio. Okay? So therefore, as a result of that, we have now got a residue of an index, what we call an alpha index, that is basically that does not have any of the haram sectors and has got a clear process of assets that are not highly leveraged in debt. Okay? And with this index, therefore, it makes it easy for fund managers to create products and invest in companies. Okay? Any question on this point? Okay, you need to understand this before we move on to... Yes, Doctor. Fixed deposits. And it will come under the second one. Interest-bearing securities, fixed deposits, and so on will be there. Okay? Now, and the net result of this, I think I should... Yes, Dato'. Yes. Yes. Yeah. 24 months. Yes. We did that because of that. And the reason for that was partly because when we were on the 12-month average, and we found that some of the companies that were actually good companies, but because market sentiments was bearish, and therefore they were, being affected by the market cap. So the Sharia board looked at it, and they had long considered whether they need to find a way to buffer it, which will give the market a window of time to do the natural correction. Okay? So one of the reasons for that is, let me just finish that and come back to you, okay? Now, you have got two sides of an operation to think about. One is from, say, the theoretical perspective. And the other side of it is to listen to the fund managers, okay? So if an index, if a particular company is being taken out from the index, under the Malaysian guidelines, the Sharia advisor wants the fund manager to sell his basket of products or stocks within, say, 3 months or less. Okay? So which means the fund manager has to sell his entire portfolio in a very short period of time, and he further adds to the selling of the stock, right? So he has to sell it off. Now once he sells off his stock for that particular item, he has to also find a replacement, right? So if, hypothetically, if he sells off Sime Darby, then he has to buy an equivalent of a Sime Darby in the Malaysian index. And you don't have many Sime Darbys like in the Malaysian index, right? So therefore, for the fund manager, what does he do? He has to buy maybe 3 smaller companies that make like 1 Sime Darby in terms of his portfolio. And that's a challenge for them, right? So therefore, they feel that, look, the amount of time to sell and then to buy back, for them within a short period of time is critical, because they have to have the portfolio with those number of stocks. And it became a bit volatile to buy, sell, buy, sell, buy, sell. And so that was an issue from the fund managers. And therefore, the Sharia board looked at it and considered it and felt that, look, we are not here to punish the fund managers and the investor. And therefore, the only way in terms of a reaction to the market is to give a window of opportunity for the market to self-correct. And if the 12-month window is not enough, then a 24-month window will allow the market to self-correct, as it has shown. From the crisis last year to now is about 12 to 18 months, and it has self-corrected back. And therefore, it helps the volatility issue is now reduced. Yes, brother, you had a question. Yeah, sure.
Bismillah. Here under the business exclusions.
Yeah.
Here you are putting alcohol, and this is by Dow Jones, yeah? Here I found the weapons and defense. Why they are excluding weapons and defense? Especially in Islamic. I think that in our Islamic countries now we need to invest in this. Yani, no need to exclude it. Please, we need to invest in this. Especially in those countries like Egypt, like, yes, like Pakistan. We are taking, every year we are taking from USA 4 billion yearly for this. And they are giving us I'm not going to the worst weapons that they are manufacturing there in
So why should we invest in the worst weapons?
They are giving it, in order not to use it against Israel. So we need I think that this is very important to invest in this, especially in those countries.
Okay. Now the Sharia board and the Sharia scholars globally disagree with you. And the reason for their disagreement is that weapons are not used for to preserve life. Weapons and the defense industry is used to destroy life. Anything that is used to destroy life is not acceptable from a Sharia point of view. Okay? And therefore, all the Sharia scholars globally agree on this point, that it is not to be used, it is not used for peaceful purposes. Okay? I think there are some minor instances, I think you've highlighted one or some of them, but I think in general principle, weapon industry is not looked as a positive screen. Even in the socially responsible screening, in the SRI screens, they also remove weapons and weapon industry. So I think it's a universal view that the weapon industry and the gunning industries are not considered to be, life preserving. Okay. Yeah, you may be differing. Huh? Okay. Okay, fine. So therefore, this slide gives you how we do the screening, right? So who are our Sharia boards? Maybe, brother, you want to write a note to my Sharia board and they may look at this again. Members of the Sharia board, we have Sheikh Abdul Sattar Abu Guda. He is also sitting in the AOFI board. Sheikh Nizam Yakubi, many of you would have seen and read on his writings. Sheikh El-Ghari, Sheikh Yusuf Di Lorenzo, who wrote the papers on purification and is now globally accepted, and Sheikh Daw Baka, okay, whom most of you would know. He's Malaysian as well as a former lecturer at the university as well. So these 5 senior scholars are